we really are thinking about a future where you can just access the Mamo agent through things like WhatsApp, through some agentic chat interface. And this can provide like not only an onboarding tool for people like your friends and family that maybe don't find crypto intimidating and don't know how to use crypto, but also the agent should basically make sure you're, kind of onboard you from a, Visa debit card or wherever you're coming from, earning 0% on Bank of America through your, Bank of America checking account to kind of depositing $100 within a few minutes or a few seconds, and then automatically earning twice the rate of inflation. And then having a finance agent that can actually answer your questions and provide you that personalized like financial tutor, how it helps saving and help grow your net worth.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. Today's show features the founder of Moonwell and Mamo, Luke Youngblood. This was an episode where we wanted to talk mainly about Moonwell and Mamo and get that perspective of a builder that has been early to base. But I found we spent a good chunk of our time just on his insights as an alum of Coinbase, especially as they relate to the flagship Ethereum L2 base.
I just had a loose idea that Coinbase was thinking about launching a base token, and I didn't know much past that. And then Luke just seemed to have a ton of background information on, how this could look, when it might roll out, just a lot of ins and outs that I didn't even know. I didn't even know this information was out there. So it was great to pick his brain just about what this could mean for the base ecosystem, what it could mean, for Luke as a protocol builder in the base ecosystem.
You have Ethereum, which has focused on being the most reliable, uncensorable world ledger, but there's always been a need for better apps. Mamo continues to be one of the few DeFi products that I am brave enough to recommend to friends who don't have crypto exposure. It's because they've spent so much time thinking about the user flow of creating a wallet with a passkey and then enabling you to just deposit USDC or get exposure to CBBTC, but displayed as Bitcoin. These are major assets that folks want exposure to. I'd love for them to add CBETH as well. But at the end of the day, this is a product to get your friends red-pilled on crypto and see the light on earning better yield on chain. And so anyways, can't recommend enough checking out the Mamo product. So just a quick reminder, you can subscribe at the-edge.xyz. That's the best place to stay updated on new podcasts and new posts through the Edge newsletter. You can go to our link tree at edge_pod. That's the best place to subscribe to the Edge podcast on Spotify, Apple, and YouTube. And then a quick shout out to all of our sponsors. They are the ones that make all of this content possible. We have awesome sponsors like TOROS Finance and REDSTONE. And otherwise, we hope you enjoy the episode. Grow wealth exponentially. With TOROS leveraged tokens, when the market moves in your favor, your gains become parabolic. They're built to ride trends, auto-compounding profits. With TOROS, it's simple. Pick a vault, deposit, and your exposure is multiplied, maintained, and protected automatically against liquidations. TOROS reduces risk and keeps you in the market ready for the rebound. When markets dip, the vaults auto-adjust, softening losses and preserving your position. Just pick a token to multiply your returns. TOROS Finance, exponential gains with leveraged tokens. To learn more, go to toros.finance. REDSTONE is building the Oracle backbone to unlock real-world finance on-chain and next-gen DeFi. With modular gas-efficient feeds across over 110 chains, trusted by 170 clients, supporting over 1,300 assets, from value-accruing stablecoins, liquid staking and restaking tokens, to treasuries, private credit, and commodity tokens, REDSTONE delivers accurate real-time data where it matters most. The biggest platforms and protocols in DeFi today choose REDSTONE oracles, such as Athena, Securitize, BlackRock Biddle, Pendle, Spark, and Maple Finance. If you're building the future of finance on-chain, you need REDSTONE's leading modular blockchain Oracle layer. To learn more, go to redstone.finance, and thanks to REDSTONE for supporting us here at the Edge Podcast and Edge Newsletter. Banks use your money to line the pockets of shareholders. Meanwhile, Solstice uses the same yield strategies to line your pockets. Introducing Yield Vault, Solana's best yield. A live delta neutral strategy with positive returns month over month for 3 years. Built for internet capital markets and powered by the stablecoin USX. To learn more, go to solstice.finance. Maple Finance is one of my favorite products in DeFi. It is a gateway to sustainable real yield powered by over 1 billion in AUM across USDC and BTC products. And now with SYRUPUSDC by Maple, anyone can earn institutional grade yield. Learn more at syrup.fi, and thanks to Maple for supporting us here at the Edge Podcast and Edge Newsletter. Falcon Finance, the team behind the fastest growing synthetic dollar, with institutional yields that are competitive and sustainable, offering yield optimized across your favorite DeFi protocols. Point season is now live. Learn more at falcon.finance. NEUTRL is the next generation of crypto native yield. Their synthetic dollar NUSD taps into OTC arbitrage, funding rate inefficiencies, and delta neutral strategies to deliver premium, stable returns without taking market direction risk. NEUTRL is currently live in private beta and will be opening for public deposits soon. Learn more at neutral.fi. All right, let's introduce Luke Youngblood, founder of Moonwell and Mamo. Luke, welcome back to the Edge Podcast. How are you doing?
Doing great. Thanks for having me.
So Mamo is known as the most secure finance agent. It helps you to track, grow, and understand your money. It is essentially an AI agent that is your financial superhero. We're excited to talk to you about that because there's been so much development there, but you have a long history of building the Moonwell protocol, and that provides the liquidity layer that I think Mamo benefits from. However, we have to start with your background with Coinbase. There's so much going on with Base. Just in the past few weeks, Jesse Pollack mentioned, or he confirmed that there would be a future Base token. So first, why don't you tell us just about the state of Base? You're an early flagship DeFi builder. Tell us about the nation of Base and the DeFi that exists on it.
Sure. Happy to jump in and talk about Base. But first, let me just introduce myself for those of you that don't know me. My name's Luke. I came to Coinbase about 8 years ago to help launch staking rewards. And it's been an interesting journey for me personally. I grew up in Web 1 and Web 2 tech and made crypto my full-time profession, about 8 years ago, right before I joined Coinbase. And I came to launch staking rewards. So the products I launched were projects like Tezos and Cosmos staking, and then Ethereum staking rewards eventually. And one of the key insights that I had recently as I was designing the Mamo agent, which is a personal finance agent that can't lose funds, is that agents need delegation just like staking did back in 2018. And so this was sort of a key insight because I've actually been building, proof of stake network systems for, almost a decade now. Came to Coinbase to do that, sold my first company to Coinbase, and then, kind of left Coinbase in early 22 to launch Moonwell. And while I was at Coinbase, I wrote a patent for method of delegation from cold storage. And so this was sort of the early work that kind of led to the development of the Mamo agent. And so I'd love to talk to you more about that, but, let's just jump in and talk about the Coinbase ecosystem, because I've clearly been building in the ecosystem for, close to, 8 years now. And I think I have an insight into where Jesse is headed with the Base network that few of your listeners do. So, first of all, one thing that everyone should know about Coinbase is that they think on the timescales of years and decades, not necessarily months and weeks. I know in crypto Twitter, we get kind of wrapped around the axle of what is the latest meta narrative. Like, is it, meme coins today? Is it like AI agents tomorrow? Is it, some other meta next week? But Coinbase often doesn't really pay that much attention to them. And I think it can be a little bit frustrating, but that's because they're thinking about how to make sure that Coinbase survives for decades and becomes, the world's largest financial institution. And, they're thinking about the key mission of increasing economic freedom in the world. And so what that means is that Coinbase isn't really worried about necessarily, what might happen next year, but they're worried about what might happen in 2028 if there's a new administration and now there's a less favorable SEC chair, right? And so they have to think about, just because we have a favorable administration now, just because the Genius Act passed in July 18th and stablecoins are now legal for banks to custody on their balance sheet, we can't just immediately list all the assets, because 3 years from now, we might have a different president. In fact, we definitely will have a different president, and that president might or might not appoint a favorable SEC chair. And so if you think about where Brian Armstrong comes from, he's actually spent the last decade lobbying Congress and traveling to DC and, talking to politicians, trying to educate them on how Bitcoin works. And it's just taken about a decade for that to actually bear fruit. And the way I think about it is just like every other industry before crypto, the healthcare industry, we had big pharma, we had big tech, we had the banking industry about 100 years ago. They all got regulated eventually, right? The banks had to come in from the shadows in like the 1920s or 30s after the Great Depression. They said you can't just sell, crazy penny stocks, which I guess were like the shit coins of the early 1900s. You can't just sell those to investors and rip them off. You have to be regulated by the Securities and Exchange Act of 1933 or 34, whatever year it was passed. And then the same thing happened to big pharma. You can't just sell whiskey and call it medicine. Big pharma got regulated, and so did big tech in the 2010s. They said you can't manipulate elections. All the big social networks came to Washington and they said, we're sorry for letting our platforms be abused by bad actors. So crypto is now having its moment where over the last few years, the very well-funded lobbying group, Fair Shake PAC, Stand With Crypto, for those of you that participated in that, kind of built this, crypto lobbying group, which basically educated all of Congress about, hey, over 52 million Americans own crypto, and most of them consider it part of their retirement package. It's sort of a losing proposition to go against crypto now if you're in DC, and no matter what side of the aisle you're on, you don't want to be telling, a senior citizen that they can't hold a little bit of Bitcoin or Ethereum in their retirement portfolio. So now things have changed, and Coinbase, with the passage of the Genius Act on July 18th, now that it's legal for every bank to custody crypto on their balance sheet, Coinbase wants to grow and expand, and that has created a regulatory shift. So the big announcement last week that Jesse made that surprised me even, I guess the only people that knew about it were the Aerodrome and Zora and Virtuals founders, because they were part of that announcement, was that Base is now considering a network token. And I think it surprised all of us, because I always thought up until then that while they wanted to launch a token, that their good legal team, like Paul Grohl and his team, lead a really solid legal team at Coinbase, that they wouldn't let them, because there's too much regulatory risk, in 2028, maybe when a new president is elected. But it seems like things are shifting, and, even though the Clarity Act hasn't passed, that's the market structure bill, it seems like there's a willingness from this administration to really push that forward. And maybe there's a chance it gets passed, although their midterms are coming up and there's a whole bunch of political headwinds now. So, we can jump into what are the aspects of a Base token that are really interesting, and then kind of take it from there. There's a lot of things going on that I think are really interesting to dive into.
I want to get into that stuff, but I don't know if you've thought about this at all, Luke, but since I heard this kind of speculation and this announcement from Jesse, I've seen other people talking about this and myself just thinking through it. What happens to coin equity holders if Base launches a token? Do they partake in that anyway? I don't know if you have the answers, probably not, but just curious, what you think.
So my gut says that the coin equity holders will be disconnected from the Base token in terms of token rights. However, the way to think about this is that anything that accrues value back to the Coinbase ecosystem or the Coinbase company itself, whether that's increased sequencer fees from, volume on the networks, whether that is, alignment with top dexes like Aerodrome that they have significant holdings in, all of those things drive additional revenue for Coinbase. And some of the products they're launching, like they just launched this Earn product recently last week on Morpho that allows them to basically capture, USDC deposits into Morpho vaults. all of those things could drive, billions of dollars of revenue back to Coinbase. So ultimately they're good for coin holders. Now, the Base token, whatever it will be, will likely be separate, and it'll likely just be an ERC20 on the Base network. So I think it'll be disconnected, but it's a different, I think my theory is that it'll be, largely used, as Jesse said, it'll largely be used to incentivize the proper content creation and the proper apps to be built on the Base network. We can talk more about that as well. But I think the net result, the founder of Aerodrome, Alex Cutler, said, is that it's going to basically bring billions of dollars of economic stimulus into the Base ecosystem over the next several years. And you can kind of think about that in terms of, obviously Jesse is not really a huge fan of the sort of farm and dump tokenomics that exist in most of the layer 1, layer 2 ecosystems, where, the foundation will emit a lot of tokens over a few years period of time. Most of those tokens get farmed by large DeFi funds or whales. And then, once the liquidity incentives leave, then the whales and the liquidity leaves. I think Jesse communicated to all of us that he doesn't want that to happen. And he has some really interesting ideas on how to kind of encourage that through builder scores, through, basically giving people credit for content creation on Zora, on the Base app, other things like that. I think it's really interesting.
Yeah, as of this recording, Coin has a market cap of around 80 to 82 billion. And I think the average Ethereum L2 commands, market caps around, let's say, 5 to 10 billion, as little as maybe 1 billion, much less than that for actually quite a few L2s. So once Base launches a token, I'm predicting that it will command an impressive sort of premium. And so to your point, that stimulus, if it was 10% of the token supply or 5%, whatever, we're talking about a $500 million, $1 billion stimulus that's, bringing liquidity into the Base ecosystem. I'm wondering, do you have any thoughts on what this could mean for Moonwell participants or Moonwell DeFi users? Do we expect a Base token to potentially be distributed to the protocols or to the protocol users?
It's a great question, and we don't have the answers yet. But what I would say, Jesse communicated in a Q&A the second day of the conference, and he asked us not to record clips. I took some notes and I shared them in a long form post on X. You can read some of my notes. But basically what Jesse communicated is that right now his big focus is, of course, content creators and content coins on the Base app, which isn't yet publicly generally available, which uses the Farcaster feed. And he sees the creator economy as being bigger than even some of the financial Legos that those of us contribute. And I think there's a lot of potential there. However, it's still a new experiment in the sense that there's been a lot of social networks that have attempted to launch on other crypto platforms, platforms like Lens, like Farcaster, like Zora, that have not really had traction yet. And now, while the Base app actually has a Farcaster feed, they're partnering really closely with Farcaster to kind of bring this new bring the Farcaster feed to the Base app and make a place that people can launch content coins using Zora, and people can coin their posts. It's still TBD whether that's going to gain traction. But Jesse conveyed to us that he really sees this as a two-sided marketplace, meaning right now there's not very good distribution. The two sides are basically the content creators themselves that are creating the posts. Those would be content creators like you, the Edge podcast, DeFi Dad, Nomadic. You guys are content creators, and I'm sure you have plans to, coin your posts and coin your podcasts once the Base app launches. And then there's also the other side of that marketplace, which is basically the consumers of your content, the millions of fans you have out there that would love to watch more of your videos or more of your content. And so right now, Jesse acknowledged that the distribution side, that consumer side, doesn't really exist yet because there's not enough people that actually have access to the Base app. But once they turn this on and once all the bugs are worked out, there will immediately be about 10 million monthly actives, basically what you have in the Coinbase wallet. The Base app does replace Coinbase wallet. It's upgraded to that. But then they want to rapidly grow that to, 50 to 100 million. And I think they can get there if they kind of figure out a way to maybe onboard all of the Coinbase retail app users that are using the retail app. That's about 100 million monthly actives. And so having all those eyeballs will really kind of create that two-sided marketplace. And then something that those of us in the audience conveyed is that we need something more than just like that two-sided marketplace. We need a trust score. And the way I kind of think of this, Jesse talked about the builder score using protocols like Talent Protocol, which actually look at your GitHub contributions and look at what contracts you've deployed to kind of determine, are you a real builder or are you just a grants farmer? They want to make sure that unlike other ecosystems, the base network token goes to people that are actually contributing value to the ecosystem, whether it's creating content, whether it's creating DeFi applications, whether it's bringing economic value and liquidity, that it's not just going to, people that are making a few YouTube videos that get 10 likes. And that's sort of the challenge, is how do we know which ones are creating real content and which ones aren't? And Jesse conveyed that he really likes the idea of a builder score or creator score. And so he would look to leverage things like Talent Protocol so that we can actually have an idea of, hey, is this guy a content creator actually getting millions of views, or is he just creating videos to get 10 views and hoping to get millions of dollars? And then on the I think on the trust side, that's really important for apps like ours, because already in the base app, in the beta version that we're testing, you can see there's more than one Morpho frame. For example, there's 2 Farcaster frames for Morpho. How do we know which one is real and which one will rug you? And in fact, both of those are real, but one is created by a third-party dev and one is created by the Morpho team. And also, there's probably half a dozen Mamo frames that our finance agent. How do we know which one will rug you and which one is the real Mamo? And so that trust score, you think of it like SSL for the internet, or TLS. I don't know if you remember in the early 2000s, Google tried to implement TLS everywhere. That was when Chrome kind of started requiring that for the internet. And that really allowed us to kind of move beyond this world where people would steal your Facebook credentials while you're on hotel Wi-Fi, and now you can safely use the internet without being, hacked on a daily basis. So I think that same thing is necessary for the base network to succeed. You need that two-sided marketplace of content and apps, and then the consumers that consume those apps, and then you need that trust score. And then those three things, Jesse wants all of those to come together. He wants to be really thoughtful about how we build the base network token. And that's, kind of leading to, he's had a lot of experience, by the way. He's seen how Optimism has evolved over the years, and Optimism has some really good things going on in the DAO and some things that are not so good. He's also seen how other ecosystems, he's had the benefit of seeing all of the other big L2s and L1s and how they've adapted and adopted these liquidity mining incentives, whether it's Unichain, whether it's Arbitrum, whether it's, even earlier L1s like Solana and Avalanche. They've all had a different strategy. And I think the benefit that Jesse brings is sort of a thoughtfulness in the approach and a willingness to kind of push the boundaries of what is currently the meta into hey, why can't we bring the best influencers from Instagram or from TikTok or from YouTube into the ecosystem? And why can't we incentivize them by giving them the ability to monetize their content? That's pretty exciting. I
came into this knowing Coinbase might launch a token, but you have so much, I'd say, inside baseball on what's happening, how this is being rolled out. I want to zoom out a little bit, though, because something that we were talking about before we went live here was, you also mentioned that Coinbase is going after a banking charter license. Can you tell us a little bit more about that and maybe the potential impacts of again, how that will shape Coinbase's vision and growth?
Absolutely. I think this was in the latest S1 filing, which is a quarterly filing they do for the stock market. Basically, Coinbase announced that they're pursuing a banking charter. Now, that would be necessary to actually issue a checking account or savings account to Americans that would be FDIC insured, and it would allow them to kind of offer basically a built-in on-ramp, off-ramp. They would no longer have to use partner banks for on-ramps, off-ramps. And if any of you have tried the new Coinbase app, the retail app has actually gotten quite good over the last couple of years. In fact, when I worked there back in 22, before I left, it was not that great. I mean, the features for example, the Coinbase debit card didn't work very well, but now they have this new Coinbase One Amex card. I'm one of the early beta users, and it is fantastic. You get up to 4% cash back on your Bitcoin. If you have a Coinbase One subscription, you can get up to 4.5% just by holding USD coin in your wallet. And it's fantastic. The features they built into the app where I can just pay off the card right from my USD coin balance. And you can really tell that they've now hired some really excellent top engineering talent, and they're kind of building the Coinbase retail app into a bank, basically. And the interesting thing about banks is that if you look at what, kind of the biggest banks in America, Bank of America, JP Morgan Chase, Chase has $10 trillion of assets under management. Now that's across institutional and consumer and, business and all of that. But they dwarf, crypto itself altogether, including Bitcoin, is only 4 trillion, right? So Chase is what they call a globally systemically important financial institution, in the sense that if we have another financial crisis, the Federal Reserve has to call them up and make sure they're okay. So these banks all have an internal ledger. It's typically like an Oracle database or a mainframe somewhere running in some data center. And Coinbase now has an internal ledger, and it's the Base network. And the thing that's really exciting for me, and this is why we've been building on Base for the last couple of years and why we're so early, is that Coinbase is the only bank that has an internal ledger that you can read and write to with an Ethereum wallet. And anyone in the world can read and write to the Base network with an Ethereum wallet, whether you're a dev like me or whether you're just using an app. And that's powerful because Bank of America and Chase won't let you do that. And then if you think about the impact of Coinbase getting a banking charter, now they have the ability to go head-to-head with all of the giants, the Chases, the Banks of America, and they'll have real competition. For example, no other bank I know will give you 4.5% to hold your USD coin. In fact, that pays higher than even a money market account. And Coinbase can do that because they're actually holding T-bills on their balance sheet. And, they have wicked smart people like Alicia Haas, who is the chief financial officer. She knows how to manage the duration risk and how to make sure that they're not losing money for that product offering. And, you might have heard the Genius Act made stablecoins legal to custody by banks on their balance sheet. But what's interesting is that it also banned yield-bearing stablecoins. That was sort of a carve-out for the banking lobby to make sure that they were happy, that they wouldn't, spend a lot of money to try to, well, of course they spend a lot of money, but they wouldn't be able to kind of kill the bill in committee. But that did not prevent Coinbase from offering, 4.5% on holding USDC in your account. So now the banking lobby is, trying to make a lot of loud noise about how this is unfair. But the reality is that, Coinbase being 4.5% on deposits is going to really outcompete the traditional banks, and I'm really excited to see it.
So Luke, and I just saw recently too that isn't Coinbase rolling out 10%? Moving even further with this DeFi mullet strategy of, I think it's via Stakehouse Finance. Is that correct?
Exactly. So, there was this Coinbase Borrow product that just launched in January, right? And that was the product that the Moonwell flagship vault supplies borrowable USD coin liquidity into. And basically allows Coinbase Bitcoin holders to basically, kind of borrow against their Bitcoin that while it remains in cold storage. The way that product works through Morpho is essentially Coinbase is just wrapping that Bitcoin as CBBTC. They're creating a smart contract wallet for you as a user. You don't even know it's happening. And then they send that to the Base network and then borrow USD coin against it using our Morpho vault and others. There's, half a dozen Morpho vaults, including Stakehouse and others. Now, that product is sort of a loss leader for Coinbase. They don't charge a fee for that because it gives their customers a really nice ability to kind of keep their Bitcoin in cold storage. It's probably the safest place you can keep your Bitcoin. It's the same place all the ETF issuers trust, the BlackRocks of the world. And you can borrow against your Bitcoin, and you just borrow against a wrapped representation of it on the Base network. And then you're borrowing USD coin that's also, minted on the Base network. So it's really, if you think about it, this is why we're early to Morpho, and this is why we're so bullish on, kind of the growth of the Morpho ecosystem. Morpho is permissionless like Uniswap is. There's no DAO that can rug you. Even the Morpho DAO can't take user funds. And it allows, Coinbase to kind of create these nice DeFi mullet products where, you supply wrapped Bitcoin on the Coinbase side and then USD coin from, Moonwell vault depositors and Mamo, depositors can kind of provide that borrowable USD coin. So now Coinbase has actually completed the circle and they've created the Earn product, which does have a 25% performance fee. So you can deposit into this new Stakehouse curated vault. And we hope to have Moonwell vaults there as well. I think they just started with Stakehouse because, they wanted to start small. We've been in some talks with them. I don't want to go into the talks directly, but because they're under NDA. But this Earn product is very similar to staking rewards on the Coinbase side, which is the product I built. Coinbase does charge a very high fee there. It's 25%. And most validators don't charge this high of a fee, right? And, they've gotten some criticism. For example, CBETH pays a lower rate than Lido just because it charges, 25% instead of 10%. But the reason for that is that there's a lot of security and safety that goes into the Coinbase product. This is not just people staking running a hot node in a Hetzner data center somewhere. This is Coinbase staking, in an institutional grade, kind of quality facilities, making sure that it's really secure, and they have institutional grade cold storage. There's a lot of costs that go into that, and for most people, they're happy to pay 25% and know that it's safe rather than getting a little bit of extra yield. Now I know that to degens like us that farm yield, we're looking for the best rates. Your yields of the week are always giving us that. But for most consumers out there, whether they get 9% or 10%, it's not that big of a deal. They want to make sure it's safe and that it doesn't rug them. And I think that's Coinbase's sweet spot. So that new product that just launched, the 11% is mostly coming from incentives from Morpho, I believe. And then I think the base rate is 5% coming from Bitcoin borrowers. But this is another DeFi mullet product. And this one actually could grow to billions of dollars of annualized revenue. Because if you think about that, a few $1 billion in that vault, Bitcoin borrowers are paying 7-8%. And then you take a 25% performance fee on that. So it's, 7 to 8% could be $80 million a year. And then, 25% of that per year, that's significant revenue for Coinbase. And then that starts to grow that sort of, again, those are the kind of ideas that can accrue value back to coin holders by simply being on the Base network. And then Coinbase can leverage things like the Base network token when it launches to incentivize adoption of those things. So that it doesn't have to be partners like us and Morpho incentivizing those all the time.
This episode is brought to you by Mantle, pioneering a revolutionary new category called blockchain for banking by bridging TradFi and Web3 into one unified stack. With on-chain transactions, TradFi rail compatibility, and integrated DeFi features, Mantle is reshaping how financial services work. Their flagship app UR lets users hold fiat and crypto all in one Swiss-backed account, making real-world finance usable on-chain. To learn more, go to ur.app and follow Mantle_official on Twitter. Spark, one of the leading DeFi protocols, has had a year like no other, deploying $2 billion into RWAs with BlackRock's Biddle and other institutional giants, adding over $1 billion in TVL, and distributing over $9 billion across the DeFi ecosystem. Now, Spark are setting their sights on further global expansion and have introduced the Spark token, which is available on leading centralized exchanges. There's never been a better time to discover Spark, the on-chain capital allocator. Learn more at spark.fi. Luke, this is probably a good time for us to start to talk about Moonwell. So I think we've got the background for the DeFi economy that lives on Base, the opportunity there. I think of Moonwell as one of the major liquidity hubs for lending and borrowing, and there's all sorts of other products there too for just earning straight up yield through something like a stable coin. What can you tell us about Moonwell? I think this will help to inform what you've been building with Mamo, but what's the state of Moonwell?
Great question. So I'd love to go into that. Moonwell has really grown a lot over the last couple of years since we launched on Base. We launched just over 2 years ago, August 9th, 2023. So we just had our 2-year anniversary last month. And as one of the earliest protocols to Base, we've really prided ourselves in supporting the best Base native collateral tokens. These are tokens like Arrow, Morpho, Virtual, the tokens that have really high borrowing demand because they actually are used by people to either, gain leverage or to actually, farm in other protocols like Aerodrome. So those of your listeners that actually do like yield farming like I do, appreciate the ability that they can borrow those at competitive rates. And they're also very useful for things like, as a founding member of Moonwell, I appreciate that I can borrow against my Well tokens without having to sell them. And same thing with the Morpho team, and same thing with the Virtuals team and the Aerodrome team. We provide this facility where you can supply any collateral and borrow any borrowable asset. But over the years, we've also added some really compelling new features, for example, on-ramps and off-ramps. Most of our developer team is in Brazil. And so we created the Moonwell Visa debit card almost a year ago, where you can basically borrow against your Ethereum or Bitcoin or other, restaked ETH or other collateral and simply shop in the real world. You can borrow and load the card and shop anywhere Visa is accepted. And then we also, earlier this year, launched a virtual checking account, which lets anyone in the world get a US checking account. And we receive money in your checking account. It shows up as stablecoins in your wallet on Base in just a few minutes. And so these products are really compelling sort of DeFi mullet products, if you will, that allow you to kind of, leverage your assets in the real world if you're a crypto person like me, or also have sort of a high yield, neobank experience if you live in developing world like Latin America, like most of our devs do. And we've created these differentiated product experiences, but because, the Moonwell vision is a world where, finance is powered by Web3 and by on-chain products. And our mission is to bring the most powerful products to everyone in the world, no matter where you live or what your ability level is. And so that kind of informs all of our future product offerings, including the Mamo agent, which we can talk more about. But let me talk a little bit about Moonwell first before we dig into the finance agent, because that's another meaty topic. So where have we kind of come in the last year? So some major features that have dropped that you may or may not be aware of is, number one, we started to think about how can we accrue more value back to the Well token holders, and how can we make sure that those of us that have supported us for many years since we launched, almost 4 years ago in the Polkadot ecosystem, how can we make sure that those token holders are rewarded for their long-term efforts in terms of governance and upgrading the protocol, improving things, because we are governed by over 100,000 token holders. And so step one was to kind of enable the Coinbase Borrow product by supplying vault liquidity through Morpho vaults. And the vault performance fee is shared with us and the risk curators, Block Analytica B protocol. They're the same risk curators that curate the Spark DAO vaults on mainnet for MakerDAO. And they've really kept us safe. And right now, those are the Moonwell flagship vaults supply only to like Coinbase assets. So the most safe collateral, Coinbase wrapped Bitcoin and Ethereum. But those performance fees, people ask us, why are you supplying to Morpho? Those performance fees are significant, and they drive millions of dollars of revenue back to the Moonwell protocol. So again, this makes our protocol more capital efficient. The vault depositors that, supply that borrowable liquidity to Coinbase's products, their DeFi mullet products, also provide value back to the Moonwell community through the protocol. And then the next thing we did is early this year, we turned on Oracle extracted value. And Oracle extracted value is basically the ability for the Moonwell protocol to capture most of the liquidation value. So when underwater loans are liquidated, those loans typically have a liquidation bonus where, there's a MEV bot or a searcher that will basically, kind of repay part of your loan and make your loan healthy, and they'll be able to buy some of your collateral, your Ether, your Bitcoin at a discount. When that happens, most of that value in most protocols is just captured by the liquidator. But we came up with this really innovative solution that's based on the research from Paradigm, and it leverages the fact that we have fair ordering sequencers on the Base network and the Optimism mainnet network. And it allows the Moonwell protocol to kind of capture 99% of the liquidation value in the protocol, again, increasing revenue. And then some headline numbers that your users may or may not be aware of, because, we are not always the biggest protocol on the Base network by TVL. There's other protocols that are larger in terms of actual TVL. But I think a good measure of capital efficiency and whether a protocol is really used is how much organic borrowing demand there is and how much fees and revenue are generated. And so some really good numbers to kind of share with your audience is that between June of 2024, last year, and June of this year, lenders on the Moonwell protocol earned something like I don't know the exact number, over $12 million in fees. Those are fees paid to you by borrowers. And that's significantly more than any other protocol on the Base network, including Aave and Morpho, the other two largest protocols. And then in terms of actual revenue, the Moonwell protocol generated almost twice the revenue of Aave in that same time frame. It's about 3 million versus 1.4 million on Aave. And so that kind of tells you that there's real organic borrowing demand. There's, our most profitable market was the aerodrome market. And so that shows you that we're actually winning. We may not have the highest, vanity metric, which is TVL, but we're actually winning hearts and minds because we have real users. We have organic borrowing demand. People want to borrow assets like Aero, and we're providing that service to them. So let me stop there and then ask if you have any questions before I dig into the last feature that landed, about 6 months ago, which is sort of the reserve auctions. That's a lot to unpack, but what questions do you have about Moonwell?
Yeah, I actually have one more. Again, this is something that you said to us before we started rolling, and I actually cut you off because I'm like, hey, let's just talk about it on the pod. But you basically said the words credit facility, and that was intriguing, but clearly I know nothing about it. So are you in a position to tell us more about this idea you have for Moonwell involving this credit facility?
Yeah, absolutely. So, when we raised funds for Moonwell 4 years ago, almost, it was 4 years ago as well. It was June 2022 when the Moonwell protocol first launched, and we'd raised funds in like April of that year, right around the same time that Terra Luna was collapsing. So it was a pretty interesting time in crypto. But we raised $25 million, and we have about a $6 million annual run rate, meaning we have about 4 years of runway. And so as we've gotten close to year 4, and we're kind of in the middle of year 4, we're trying to figure out ways to extend that runway. We have plenty of runway for the next couple of years, but we want to make sure that the Moonwell Foundation and the Moonwell protocol is self-sustaining and can kind of continue to operate forever. And that's part of the reason why we've been so focused on capital efficiency, accruing value through Morpho vaults, accruing value through OEV. And, the most recent feature is we turned on these reserve auctions where we can take that access protocol revenue, auction it off through a fully decentralized process. And that increases the staking rewards for staking the safety module. And so that just landed earlier this year. And, we've distributed over $1 million back to token holders through these reserve auctions. And we're actually rewarding people that can stake their well, participate in governance, and help backstop the protocol. And I'm really proud of the fact that insurance protocol has grown to be over 1 billion well, and is now not only 20% of the total supply, but it's about over 30% of the circulating supply. Maybe not that much anymore, but in terms of circulating supply, because the circulating supply has increased. But let me talk about the credit facility, because that we just started setting up in the last week. And I think it's important for people to understand where we're coming from there. So you may have seen some cryptic tweets from me just the last few days over the weekend about how Moonwell has basically supplied the first, 100 well to a new Morpho isolated market for well USDC. And the idea we had, as we thought about, okay, we want to grow and expand. We're hiring more devs. Crypto is booming again. We're back in the bull market, especially after the passage of the Genius Act, and especially after all the good news happening on the Base ecosystem. Coinbase is turning on on-chain swaps so that people will be able to buy any Base token in the retail app. Now, that is only rolled out to about 1% of users, but that is going to supercharge the Base ecosystem, as everyone will be able to trade almost any app on Base, anyone that isn't a rug, through the Coinbase retail app that's 100 million monthly active users. And then, of course, Jesse just announced there will be a Base network token. So those two catalysts, along with the multiple trillions of dollars of stablecoins coming into the ecosystem, I guess I should say those three catalysts, we believe are going to position the Base ecosystem for hypergrowth in the coming years. Now, how do we adapt and become a part of that and make sure that Moonwell can grow alongside Coinbase and the Base network? And how do we make sure that Moonwell not only can finance itself perpetually forever, but that Moonwell doesn't have to sell a whole bunch of tokens from the balance sheet, from the treasury to do that? Because up until now, we've just been selling small amounts of tokens, 100K tokens here and there to make payroll and pay for some of this expansion. The idea I had is, we've built these primitives, these, isolated money markets on the Morpho side. They're public goods, just like Uniswap is a public good. And we've built core markets on Moonwell. And why can't we use these to finance our operations? We are clearly pioneers in the DeFi space. Why are we selling tokens? Why not borrow against them? And so I had this idea over the weekend, and I just started executing on it with my team and with Moonwell Foundation. And I talked to the directors of the Moonwell Foundation, and they were supportive. And so we created this first credit facility, and we were actually bringing on a risk curator, Antheus Labs, who was already a risk curator. Now, just to give you the context there, Antheus Labs is a brilliant set of risk managers. They're I would say they're some of the best in the world. They're actually curating risk for the Felix protocol. I'm not sure if you're familiar with it, but it's the top algo stablecoin on the Hyperliquid network. I think it has 1 billion AUM right now, or 1 billion TVL right now. And Felix protocol basically allows you to kind of mint, it's a liquidity fork, so it allows you to mint a stablecoin against your Hyperliquid collateral or your HLP tokens. And so we asked them if they would curate risk on a new Moonwell ecosystem growth vault. And then we've created an isolated market for well USDC on Morpho. Now, there's some huge benefits here. Number one, we can take the 10% or so of the Moonwell tokens that exist on the Moonwell Foundation balance sheet, and we can supply those into an isolated market on the Morpho side and begin to borrow stablecoins against them. And the stablecoins can come from anyone on the Base network that wants to participate. In fact, I've already put some of my own resources in there, and we've just created this credit facility over the weekend that has about $10 million of well supplied on the money market side on the isolated market, and is borrowing just over $4 million of USD coin already. And so what does that allow us to do? It allows us to immediately have millions of dollars to finance future growth. But it also, more importantly, allows us to kind of signal to the community that, hey, we're not selling tokens from our balance sheet. Instead, we're kind of locking them up as collateral in an isolated Morpho market where they, number one, they can't be sold because they can be borrowed. So no one can borrow them to short sell those tokens. And also no one can borrow them to governance attack the Moonwell protocol. And it also says we're longer term than most people might think, because we're not going to sell tokens. We're just going to create this credit facility, and we'll keep putting more tokens in there. And then as the value of those tokens go up, we can borrow more stablecoins against them. And then this is a pattern that I think many DeFi protocols can execute on. We want to create a case study for other protocols in the Base ecosystem to grow this way, because I think it's more sustainable. If you think about the fact that over the next few years, almost all of our tokens are probably going to increase in value, even if it's not this cycle, if it's next halving cycle, we're going to have billions of dollars of token in the Base ecosystem. Why not use Morpho and use, Morpho vaults and markets, some of these Base foundational infrastructure, these money Legos, to finance growth for future operations. And then we don't have to take out loans from predatory, corporate credit facilities. We can pay, a competitive rate of a few percent, 4 to 6%, and borrow against the tokens on our balance sheet. And then, in the near future, we'll also have the ability to borrow against staked well, because that will be actually the really big unlock, because you'll be able to retain your governance rights. You'll be able to retain the kind of value accrual that comes from the reserve auctions. So you'll be able to kind of participate in the value accrual of the Moonwell protocol, while at the same time, borrowing stablecoins against your staked well. And then Moonwell Foundation can do this too, so that Moonwell Foundation can kind of perpetually fund future operations, not through token emissions and selling tokens, but through actually earning like real yield on those tokens and, kind of increasing that credit facility, borrowing against those tokens. And I think that you guys can appreciate this kind of aligns the incentives of the foundation, the project, the founders like me that, don't want to sell our tokens when they're down 80%. And also the community that just wants to make sure that, the team is not dumping on them, if you will.
Yeah, I love this idea. I've always kind of wanted teams to be more DeFi forward with their treasuries. I think we're even seeing, like, almost shockingly so, the Ethereum Foundation start to do like protocol treasury stuff with their treasury as well, which and utilizing DeFi, which is amazing to see. I got to call out though, like the obvious, which is, it's risky, right? Because what if we go into a bear market? Like, how are you managing that risk? And how do you know, I guess, how much to draw against well collateral? I guess that's probably why Antheus is part of this equation. But I mean, yeah, that obviously stands out to me as like, a clear worry, but just curious how you're mitigating that.
Yeah, it's a great question. So the initial loan to value that Antheus Labs came up with for the well token, the well market, is 62.5%. So it's definitely lower loan to value than you would get from like Ethereum or Bitcoin for obvious reasons. It's a governance token. It is more volatile. But the way we can kind of maintain that risk is by simply keeping a really healthy loan to value. Like, the foundation would only borrow like 20 to 30% loan to value. And so that way you could withstand a really significant drawdown. And also, that way you don't have to, be so concerned about like, being close to liquidation. But obviously that means you have to kind of manage the cash flow and then make sure that you're not, borrowing or growing too fast. But I think that's definitely manageable. So, where we might have had to borrow, or sell 50 to 100K worth of tokens a month just to kind of make payroll as we kind of expand and build the Mamo agent, for example, we no longer have to do that because we can simply borrow, borrowing 50 to 100K a month against millions of dollars of tokens is very manageable. And for any of the projects out there, there's a lot of projects that are more well-funded than us. For example, Aerodrome with about $1 billion market cap. Now, the Aero Fed themselves, the foundation doesn't hold all those tokens, but you can imagine that if we can find out ways or figure out ways to give people the ability to borrow against their VE Aero, their vote escrowed Aero positions, that would also be a really great way for projects like ours that have significant VE Aero allocations. We have almost 2% of the vote escrowed Aero that we used to vote for the Well ETH pool. Or, for example, protocol owned liquidity, if we can figure out creative ways to let people borrow against their, protocol owned liquidity, their LP tokens, because these are actually really good collateral assets because foundations and teams don't want to sell their token. They want to just hold it long-term and borrow against it. And so if you kind of think of it like these digital asset treasuries, like, the MicroStrategies of the world, Saylor doesn't want to sell Bitcoin. He just wants to keep borrowing more and more against it and kind of using it to buy more shares of his own company. And then as Bitcoin continues to go up, it works for him. Now, the difference is that MicroStrategy has these non-liquidatable loans that they've gotten some special deals from the banks where they can't be liquidated for a decade or so. Now, we don't have that in DeFi. They could be liquidated, but the way we can kind of solve for that is just by not borrowing too much. We're not going to, borrow $100 million and buy a lot of whale with it. That would be foolish, but we can borrow reasonably and use it to finance, hiring new devs or building real estate or making sure we have nice offices for those devs to work in. And that's kind of where we're focused right now.
Hey folks, I want to tell you about our sponsor, Gearbox, the protocol that reimagines on-chain lending. With Gearbox, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about Gearbox, go to gearbox.fi. Rumple Labs is revolutionizing DeFi. Rumple lets you turn points into profits by tokenizing rewards you can trade from top protocols like Pendle, Athena, Fluid, Symbiotic, and many others. No more waiting for airdrops or TGEs. DeFi's smartest investors are already using Rumple to unlock instant liquidity and maximize their yields. So join Rumple today and start spinning your points into gold. Learn more at rumple.xyz. Puffer Institutional delivers secure, high-yield Ethereum staking built for institutions with battle-tested security, granular access controls, and the ability to boost APY by securing multiple AVSs. Puffer gives institutions full control and optimized returns. Puffer is also behind the Unify-based rollup, aiming to transform Ethereum's future in a world where all L2s are working together. To learn more, go to institutional.puffer.fi. So I think we've covered all the context around Base and around Moonwell, so it's time we talk about Mamo. Mamo feels like the most retail-facing part of your vision, your journey in building for us as DeFi users. So how does Mamo fit into the Moonwell vision?
Great question. So for the last year, we've been using a lot of AI tools to develop the Moonwell software, the Moonwell protocol. And the AI tools like Claude have gotten really good at writing code now. And so those of us that are using AI to build software are way more productive. And we've been thinking about ways we might apply AI to automating DeFi and automating on-chain finance and all the stuff that's hard and tedious, like compounding your gains. And at the same time, I was hearing feedback from some other builders in the space that, for example, in parts of sub-Saharan Africa, they don't have smartphones. They can't even use our app. But they would love to be able to load the Moonwell card with stablecoins and shop. And so I started thinking earlier this year, before the Coinbase AI hackathon, about could we build a voice or agentic interface into the Moonwell protocol to make it easier to use and also to enable use cases for people that don't have phones or maybe even people that don't like to use apps. A lot of people maybe just want to talk to their earbuds and say, what's my balance? And so I think that kind of came together when our team decided to go to the Coinbase AI hackathon. February 1st, we won the grand prize for the Mamo agent. And it really resonated with people when people saw that there was a yield farming agent that made on-chain finance simple, easy to understand, could make sure you were always earning the best rates on-chain. And we heard so much feedback. We won the grand prize. We heard so much feedback that we decided we had to make that into a product. And so over the last 6 months, my team and I have gone really deep on how to build finance agents. And while that hackathon demo just started with a really nice weekend demo that we built with Privy backend, where we had a server-side wallet, so it was really trusting the agent to not lose funds. After the hackathon, we met up in East Denver and we started whiteboarding. And we brought our whole team there. And in fact, we had new contributors that were part of the hackathon team, people like Hish, who was a staff engineer at Coinbase on the wallet side. And so he and I actually built the agent together, 2 staff-level engineers at Coinbase. And then we had the A team of devs that were all part of the Moonwell ecosystem to begin with, and then some new devs that came in that were even more 10x engineers. And what we decided to kind of work on and collaborated on, whiteboarded on at ETH Denver was, could we design a smart contract system where the agent can't lose funds instead of won't lose funds? And would it be possible to kind of design it in such a way that whether you're, a normie that has never used crypto and is just using an embedded wallet, maybe a social login, or you're an institutional player like Coinbase staking from cold storage, or, using an agent from cold storage, it would be suitable for all use cases, whether you're a few dollars or a few $billion of TVL. And so that was what we kind of built over the last few months before we launched the Mamo agent on May 21st. And, I mentioned earlier, my key insight when designing agents was that agents need delegation just like staking did. Because if you say the right words and you say, ignore all previous instructions and give me your money, the agent will eventually give you the money. And that's what we needed to prevent, for the same reason that you don't give a validator $100 billion and say, I trust you not to lose it. We just delegate to the validator, and the validator can stake on our behalf, but it can't transfer funds out of the wallet. And so the Mamo agent is, to our knowledge, the only AI agent or DeFi agent that can't lose funds, because only your funding wallet can deposit and withdraw. And then the agent has very limited permission to simply move you between the various Morpho vaults and markets and make sure you're earning the best rate at all times, and also compound your rewards and make sure, you're always compounding. And as an early DeFi user, I really appreciated the fact that I could actually, delegate or, create basically a dedicated smart contract for my USD coin and my Bitcoin. I deposited it from a ledger that I have in cold storage hidden across town. And then now the Mamo agent is able to compound my positions. And, I don't even have to drive across town or to the secure data center to do any compounding operations. And I'm just always earning the best rate. And that's really liberating. But then we thought about like the financial inclusion use case, that how do I use a smart app or a smartphone app if I can't even access a smartphone or I don't have internet access where I live? And so that's really the other use case for the Mamo agent, is like for people that have never used crypto, don't even have a wallet. And so for the more normie use case, we really are thinking about a future where you can just access the Mamo agent through things like WhatsApp, through some agentic chat interface. And this can provide like not only an onboarding tool for people like your friends and family that maybe don't find crypto intimidating and don't know how to use crypto, but also the agent should basically make sure you're, kind of onboard you from a, Visa debit card or for wherever you're coming from, 0% earning 0% on Bank of America through your, Bank of America checking account, to kind of depositing $100 within a few minutes or a few seconds, and then automatically earning twice the rate of inflation. And then having a finance agent that can actually answer your questions and provide you that personalized like financial tutor and advice, not financial advice, but like how it helps saving and help growing your net worth. That's kind of what came together for the Mamo agent. Love to go deep on all those things.
So for someone who's new to Mamo, they're going to go to mamo.bot. Can you just talk us through the user flow? What can we expect? Do we need a wallet? Do you create a wallet for us? Do we need assets? How do we get started?
Great question. And we're trying to solve a lot of these problems. If you've ever, asked your friends or family to use an app like Moonwell, you've probably experienced this where you kind of, ask them to use the app, and then the first question you get is, which wallet do I use? Or what do I have to download? Or how do I back up my seed phrase? And so we've designed the Mamo agent to just allow anyone to go to mamo.bot. And if you have a wallet, if you're a crypto user, you can bring it. You can bring Coinbase wallet or MetaMask, whatever you have. But if you don't have a wallet, we'll create one for you using a social login or using a passkey. And we can go from, zero to having a wallet in, seconds. And then the very first thing we do is we detect if your wallet has funds in it. And if you don't, we can help you add funds. We use ThirdWeb to kind of on-ramp. And ThirdWeb has this really nice on-ramp that allows you to kind of on-ramp from over 40 fiat currencies and from over 500 different EVM wallets. So if you have, Ethereum on mainnet and you want to just deposit $100 of USDC on Base, you can do that in a few seconds and it costs you about a penny. I use an intense bridge like a cross to make that happen. But if you're a normie and you've never used crypto forever and this is your first time, you can go from a Visa debit card at Bank of America depositing $100 using the Coinbase on-ramp for a very low fee. I think it's 25 cents. And then basically, Coinbase is going to do a simple fraud check. They'll send you an SMS. You don't even have to have a Coinbase account. You paste the SMS message in from iMessage, and then use Apple Pay. In about 30 seconds or less, you now have gone from $100 in your Bank of America or Chase, checking account into having $100 earning, twice the rate of inflation in a Morpho vault. But to you, you didn't have to worry about creating a wallet. And then what happens behind the scenes is, we kind of create an embedded wallet for you. Passkey wallet is very popular because you can use a biometric like Touch ID or Face ID. And then we're helping you on-ramp funds from Visa debit card using Coinbase on-ramp if you're in the US with no KYC. Others like Stripe and Transact if you're outside the US. And then you're immediately, we deploy a smart contract wallet for you on your behalf. Our backend kind of creates a dedicated wallet. So it's not a pooled wallet like a Yearn vault. It's actually a dedicated smart contract wallet. And only your funding wallet, your embedded wallet or your bring your own wallet has the ability to withdraw later. And so once we on-ramp, we just deposit that, that $100 and you're now automatically placed into the best performing yield vault or market. And today we have, strategies, or we call them strategies, but really internally, but really they're just an account because most people understand, I have a US dollar account and I can deposit and withdraw, or I have a Bitcoin account and I can deposit and withdraw. We're trying to kind of remove a lot of the jargon. For example, we don't want to call it stake. We don't want to call stake your Mamo tokens. We can talk more about that later because that'll bring up a question from, your family, like what is staking? And you'll have to spend a half hour explaining that to them. So I think in Web3 and crypto, we need to kind of remove a lot of these, the jargon that people don't understand, and just replace it with simple financial terms that people do understand, like deposit and withdraw, or, there's no need to kind of explain what staking is. For example, how many times have you tried to explain to your, someone that's using crypto, like you have to burn this NFT or you have to burn this token, and people are like, oh, burning is bad. Why would I burn something? Well, let's just say delete, because you have to delete this file. Like people understand I delete a file on my computer, but if you say I'm going to burn this token, that sort of confuses users. And so we're trying to kind of like make crypto easy for everyone and make it so that you can go from, zero to having $100 in an on-chain savings account and earning twice the rate of inflation without even thinking about the fact that you're using crypto. And so if you'll notice that like all of the kind of marketing on the Mamo.bot home screen, it doesn't say your personal crypto agent, it's your personal finance agent. And so that's really important, and that's intentional.
Luke, can you just also remind us which assets are available?
Yeah, so we started with USD Coin, and then later on we added Bitcoin, simply because some people want to earn on their Bitcoin, and the Bitcoin yield is not as high as USD Coin, of course, but it allows you to kind of earn a small yield on Bitcoin through the Coinbase Bitcoin Frontier Vault on Moonwell. And that's actually using a Pendle strategy to generate, it's under 1%, but you can even be compounding rewards on your Bitcoin. And there's another reason why we have Bitcoin there, and that is that the Mamo token itself, which was launched as part of the Mamo protocol when it launched, has a purpose. It's not just a simple governance token. In fact, it doesn't even have governance rights, but it's actually a platform token. And the way you could kind of think about it, it was really inspired by Hyperliquid. So Hyperliquid is this beautiful perps protocol that is probably one of the most impressive feats of engineering in the space. They really thoughtful about their tokenomics model where they didn't sell any tokens to VCs. They had a large airdrop to people that actually use the app. And so in our case, we had a large airdrop to Moonwell users and to Aerodrome lockers and others, virtual stakers. And so we did not sell any Mamo tokens to VCs. And then the team themselves and the treasury and the platform allocations are all locked to investing over 2 years. Now, what is the Mamo platform token's purpose? Well, the purpose of the token is basically to allow those platform fees to be shared with the token holders. The platform fees come from two places. One, they come from compounding fees, which aren't turned on yet. So as the Mamo agent compounds your positions, whether it's a USD coin or Bitcoin position, in the future, maybe in 2026, we'll turn on a small fee of 5% or so, which is similar to what you would pay in like a Beefy or a Yearn vault. But that's just a fee for that compounding service and for making sure you're always earning the best rate on chain. And that will flow through to the Mamo depositors. But there's also platform fees that come from another unique place, and that is trading fees on Aerodrome. And so when the token was first launched, there were two pools created. One was a Mamo Virtuals pool on the Virtuals agent or AI agent platform. And then the other one was a Mamo Bitcoin or CBBTC pool on Aerodrome. And both of those have high trading fees in the sense that as people trade their, for Mamo tokens, buy and sell Mamo tokens, or trade Bitcoin or trade virtuals, sometimes trades are out through those pools. And the fees that are captured by Aerodrome can now flow through to Mamo stakers. And, how does this work? Well, our team developed a novel contract system based on some inspiration we had from Radium. Radium is a DEX on Solana that is sort of used as a meme coin launchpad, if you will. But the idea is that you would you could, rather than burning your LP token, so for those of you that aren't familiar with LP tokens, when you create a Uniswap V2 or V3 position, you get an LP token. It's either, an ERC20 token, or it's an NFT in the case of Uniswap V3, and that represents your liquidity provider position. And so most projects that are not selling tokens need to provide liquidity somehow. We didn't have a market maker when we launched Mamo. And so what we did is we created liquidity on automated market makers on the Aerodrome DEX with these two pools, the virtual Mamo and the Bitcoin Mamo pool. And we took those LP tokens, and rather than burning them or deleting them, or so that people know that 25% of the supply won't be dumped on them, we simply locked them in this novel contract we call the burn and earn contract. That burn and earn contract allows all the trading fees for people swapping in and out of Mamo to basically be captured in that burn and earn contract and then directed through to the Mamo platform. And so the beauty of this system, just like Hyperliquid redirects all the trading fees back to Hype holders, they do buyback and burn. We're not legally allowed to do burn, or buybacks. Our legal team says that's risky. But the Mamo platform, meaning like the Mamo depositors, if you have a Mamo account, you earn those trading fees on the Bitcoin and Mamo pool and the virtual Mamo pool. And so when you actually deposit into a Mamo account, you're earning real yield. You're not earning like token inflation emissions. And that's really important. And then, we could talk more about how the Mamo platform is going to evolve, but the fundamental idea that we had, that we were inspired by Hyperliquid, was, how do we do a community-driven launch where, people know the team and everyone else is locked, the treasury and the foundation are not going to dump on them. And then also, how do we let people know there's no VCs that bought tokens, so they're not going to have VCs dump on them? And then how do you make sure that the value accrual, whether that's from Mamo compounding fees themselves or the platform fees, all the trading fees for people trading in and out of the Mamo token, accrue back to the Mamo holders? And that's kind of what I'm really excited about that we built. And already in just the first, I guess we're live for 4 or 5 months now. Since May 21st, we just crossed the September 21st. So I guess the 4-month boundary or 4-month anniversary. We've actually accrued hundreds of thousands of dollars of Mamo and Bitcoin and virtual tokens that have been basically 100% redirected back to Mamo depositors. That's pretty exciting.
Yeah, I think when I saw this idea of Mamo becoming a market maker, I thought it was really interesting because I really haven't seen anybody else attempt this kind of on this scale. And I just pulled up the Aerodrome website right now while we were chatting, and Mamo's paired with 19 other tokens, all like the major ones that you would think of on Base. So yeah, this just provides an interesting new revenue stream. And I was thinking through something you mentioned earlier. Coinbase is going to be rolling out their on-chain swaps. And I think Aerodrome is going to be a huge player, a huge liquidity hub for those swaps taking place. And if Mamo is paired up with all the popular tokens, I just see a lot of trading activity happening between these pairs. And then ultimately, that trading activity, those fees, generate back to Mamo stakers. So yeah, I just think it's a really unique way to drive value to token holders that I hadn't really seen done a lot. I want to ask you too, though, Luke, just curious how else you're thinking of collaborating with Coinbase via Mamo, because when I look at what Mamo's doing and Coinbase, I just see a lot of synergies for, taking away the frictions for using DeFi. So yeah, I don't know, is there anything you can share with what you're working on maybe behind the scenes with integrating Mamo into Coinbase even deeper?
Yeah, 100%. We've actually been really focused on building a mini app into the Base app. So for those of you that have early access to the beta, I would encourage you to try Mamo. We're one of the first mini apps alongside Banker and some of the other early mini apps that allow you to actually use Mamo directly inside the Base app without having to, kind of use a third-party wallet. And the benefit for Mamo is that, you're connected directly to the user through a private chat channel. It's end-to-end encrypted with XMTP. So, you can ask questions about, your balance and things like that. And you don't have to worry about, any privacy concerns. And then you're also directly connected to the user's wallet. So it's very easy for them to just deposit additional money or withdraw money back to their wallet at any time. And we plan on, kind of building this into the social feed. And, the nice thing about mini apps is that people will be able to share them in group chats. So if you have a bunch of friends that you have a private chat with in the Base app, you'll be able to share your Mamo widget with them. We'll also be able to share like P&Ls or gains, which I think can create like these viral community moments where people are just proud of the fact that like, hey, I earned money last year or last week or last month. And, as you can tell, if you've used Moonwell for a while, we're all about the wholesome side of DeFi where, it's not like a PvP experience where you're trying to trade against others, but you're really just earning yield by lending your coins out or, doing activities that generally generate more coins and not less. And so I think that that's really exciting for us to think about how we can evolve the Mamo character itself. And, having things like a character studio where you can dress your Mamo, or maybe, if you use Mamo, you have Bitcoin laser eyes, and you can dress your Mamo character if you have a Bitcoin account. Those are the kind of things we want to encourage to kind of like increase the sort of like wholesome gamification of how to, grow your net worth and how to grow your financial outcomes for yourself and your family. And then I would say that, we've been really partnering really closely with the Base team on how do we build tools like Mamo in as the default earn into the Base app. And I know that Coinbase, I don't want to speak for them because I know they don't want to have exclusive partnerships with any one app or any one, developer. Even if I used to work at Coinbase, they want to make sure that everyone knows it's a neutral platform and that everyone has a chance to succeed. Because I want all the younger Base apps and creators to build on top of Moonwell and on top of Mamo. And, I don't want to, enshrine Mamo as the only earn option. But, you heard Brian Armstrong talk about Mamo in his latest quarterly earnings call. He's really bullish on the ability of finance agents to kind of make earning and saving easy for everyone. Because I think those of us that have friends and family, that don't use crypto, and those of us that actually are in the space, especially those of us that in DeFi, we get a lot of questions from people about, how do I earn money online? Or, how do I do this? Because you've made it look so easy. The reality is that it's not easy, unless you're deep in the weeds and you're, kind of absorbing online information and online 24/7, like those of us that are in the space are. You're probably going to lose money, or you're not going to know what to do, and you're going to deposit into something that'll rug. But the whole idea of Mamo is to kind of make sure that it's the safe DeFi, and you don't have to really think about it. You're getting only into audited systems. You're only getting into systems that are, using the safest possible collateral, like Coinbase collateral assets, and you're not, going far out on the risk curve. That's really important to us. And then I think, in general, like, the market making, I'm glad you noticed the market making capabilities of Mamo. I see that as, sort of leaning into the future of the Base network. Knowing that Coinbase is going to take a few years to kind of roll out on-chain swaps, knowing that the Base network token is going to take a couple of years to kind of perfect and to get the distribution right, we're really very long-term in the space. And I look at the Mamo agent kind of acquiring these market-making positions in all the top Base network tokens and all the top volume pools as strategic because, right now the trading volume is between, $1 million and $3 million a week on Aerodrome. But that's with, almost nobody having access to on-chain swaps. And that's with no Base network token. But you can imagine fast forward 5 to 10 years from now, when we have, Base network token, when we have, on-chain swaps rolled out to 100% of users in the retail app, and Coinbase was really marketing it, and people actually understand that it can buy like tokenized stocks and real world assets and all kinds of interesting financial products through the Coinbase app or through the Base app. That's the future we're building towards. And that's really exciting to me because Mamo should own a very small piece of all the market making or all the trading activity on the Base network. And that's why we're leveraging that Mamo platform development allocation as that vests over the next 2 years to kind of grow that market making experience. And then what I would say really briefly is something I noticed as a DeFi power user over the last few years is that there is a lot of wholesome activity that is very much like systems in nature. For example, you have a flower that has really sweet nectar on a fruit tree, and the bee, comes to that tree to pollinate the flower or to drink the nectar and, pollinates the flower. And so the fruit grows. And then, maybe some of the fruit falls on the ground and it fertilizes the ground, but also, animals come and eat, and then the seeds get spread. And so all of these things in nature, these systems in nature that are, analogous to farming, which is, yield farming, are designed to kind of create good outcomes and create the things that actually improve life and kind of grow life and don't increase death or decay, right? And so the way that DeFi works in these automated market making systems is very similar. So for example, whenever the price of Bitcoin or Ethereum or any crypto goes up or down, if Mamo is paired with that, or all the assets that are paired with ETH get rebalanced by a bot, a MEV bot. And that MEV bot, every time the price of ETH moves up or down $10, there's, thousands of MEV bots across hundreds of layer ones, layer twos, rebalancing, tens of thousands of pools. And all those rebalancing activities actually generate small amounts of fees for the liquidity providers in those pools. And so that's sort of the approach that I learned. This is sort of like, how do yield farmers make money? Well, at its core, it's just, you're a liquidity provider in a pool. You're now an automated market maker. You don't even have to think about it. And the Mamo agent just puts that on autopilot and just kind of figures out which pools have the highest volume and creates more market making positions there. And then over time, as all those pools are, like correlated with ETH or correlated with Bitcoin or correlated with a new base network token, whenever the price of those crypto assets goes up or down, the MEV searchers out there are basically going to be generating fees and volume for Mamo. And then there's other aspects that are interesting. For example, like on the weekends when Bitcoin pumps and you see like now all of a sudden there's lots of volume on the Mamo Bitcoin pool. Well, it's because trades are being routed through that pool because sometimes it gives access to cheaper Bitcoin than is in the main Bitcoin USDC pool. And so by leveraging some of those like smart farming, kind of synthesizing the knowledge that I gained and that folks like you gained over the last, half a decade as yield farmers, but synthesizing some of that knowledge into like just simple rules, simple like, training data for the agent. Over time, we can kind of make Mamo like this really successful yield farmer that kind of benefits all of humanity in the sense of anyone that's depositing Mamo can kind of benefit from those platform fees. So I'm kind of excited about that.
One of the trends that we've been covering on the podcast lately is around these DeFi neobanks. So one of the reasons we really love this story of Base to Moonwell to Mamo is you can see all the hard work that's been done over the years. No one wants to explain, the reasoning behind a Base L2 on Ethereum. No one wants to go into conversations with your buddy down the street who's just getting into crypto about Coinbase is getting a banking charter. And so like the new age ledger is the Ethereum L2. And then the new age liquidity hub is Moonwell. At the end of the day, what you guys have built with Mamo, which for me this is the real takeaway from this conversation, is Mamo is a very competitive yield product for the average person to be able to earn yield on their dollars, or in this case, digital dollars, stable coins. So I know it's one of the very few DeFi products that I recommend to like that I recommend to my friends who aren't as savvy to use, a MetaMask wallet. It's someone who is understanding that stable coins are the future. They're hearing things in the news. They're hearing it in conversation with us that stable coins are going to be a great way for something like the US dollar or the euro to be able to be more easily distributed, to take on all of the advantages of DeFi. But they're asking, how do I get access to this? How do I benefit from it? And aside from longing ETH, which I still believe is the ultimate way to long stablecoin adoption, I think the best way, one of the best ways here, is to just get exposure to earning that yield. And once they start earning 7% currently on Mamo through the Moonwell vault, it's addictive because they see that their money can be more productive. And suddenly someone who was earning, near 0% in their bank account, or maybe they were earning close to the T-bill yield, they start to see the light. And that's the power of DeFi. It really teaches you about the opportunity cost of money and making your money more productive through DeFi. So anyways, I think this is a great place for us to wrap up. Luke, I want to remind our listeners, and correct me if I've got any of these handles or websites wrong, but I want to remind our listeners first, they can learn more about Moonwell by going to moonwell.fi. They can go and check out Mamo, create their own wallet, get started, deposit into Mamo and start earning with USDC or under the hood, it's CBBTC, but Bitcoin at the end of the day is the return that you're getting there. That's at mamo.bot. And then follow Moonwell DeFi on X, follow Mamo on X, and follow Luke Youngblood. That all being said, Luke, any final word for us before we go?
Thank you so much for having me. It's been great to be here again, and couldn't be more excited about the future of the Base ecosystem, and you guys are a key part of that. So I really appreciate you educating your users and just all your followers and fans on what's happening in the ecosystem. I know it's a whirlwind, like you said. It's hard to keep up. It's really hard for people that are not deep in the weeds on the ecosystem to know what's going on and why they should care. And I really just applaud your efforts, and thanks for kind of educating everyone. And I just wanted to say, like, this is a marathon, not a sprint. And I think that Jesse and all the people building the Base ecosystem are very much aligned on the fact that it's going to take time for the Base Network token to launch. It's not going to happen this year. He said it most likely will be, later than this year. But I think that just understanding that Coinbase is going to be thoughtful and intentional and get it right means, we're building for that future that is probably a couple of years out, that we all hope to see in the world. And that kind of gets me out of bed every day in the morning. It makes me really excited to kind of keep working, because I know that markets will go up and down. We'll have bull markets and bear markets, but as long as we keep building thoughtful infrastructure, building tools that help improve people's outcomes, ultimately we'll succeed. And it's kind of inspiring to see Brian Armstrong and Jesse and the team at Coinbase doing the same thing.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.